Ladies and gentlemen, welcome back to the Crypto News Podcast. We are buzzing as always. And folks, I am super pumped for this episode for a couple of reasons. First and foremost, as always, whenever I'm invested in a company that comes on the pod, I always let you guys know this is a little bit of a different one. These guys they are a crypto focused company, of course, but it isn't a crypto ticker. This is a TradFi ticker, and there are many of them. If you guys enjoyed the ETFs, and if you guys have enjoyed the billions and billions of dollars that the ETFs have brought into the crypto sphere, you have this company to thank. I friggin' love these guys. They have moved the needle more than anyone else. They literally started the ETF parade, and that is the one and only 21Co. You guys know them better as 21Shares, the company with a bunch of crypto-based ETFs. And today we have Federico Brokate, VP, the head of US business at 21Co, on the show today. Federico oversees the growth of US business, providing investors with the most access, convenience, and quality to the digital asset ETF industry. Previously, he led the iShares business strategy team at BlackRock, wow, not a big deal, where he created and executed strategic initiatives driving organic asset and revenue growth. He also developed go-to-market strategies for new business verticals and managed priority product launches, including the successful launch of iShares Bitcoin ETF, snaps to that. Federico also holds a Bachelor of Science in Business from NYU Stern School of Business with dual concentrations in finance and global business. Super pumped for this one. Federico, welcome to the show, my friend. ¿Cómo estás?
Hello, Ian, Matt. It's a pleasure to be here with you and the listeners today.
Pumped to be here with you as well. Next time I record with you, hopefully 3 to 6 months down the road, we might do the first ever Crypto News episode in Spanish. That will be an absolute treat. I got some work to do. But look, man, super pumped to have you on. Before we get into it, before the show, you and I were shooting the shit. You were born in Colombia. So cool. I love South America. I'm gonna be spending some time in Argentina, currently in Mexico. I absolutely love it down here. And I've been learning Spanish myself. I think a good place to kick off before we get into all the really cool stuff that you guys are doing. Tell us about your journey, growing up in Colombia, coming up to, New York, really, really moving and grooving, making your way in the business world. What was it like growing up in Colombia, and sort of walk us through your journey from, a little Latino boy in Colombia all the way up to big old TradFi in New York City?
Well, I appreciate the intro and the kind words. Growing up and between South America and Florida, actually, it was a super interesting experience. Like many other immigrants in the U.S., we frequently went back home, and we grew up kind of straddling the two countries, if you will. So some of the things that make me who I am today are very inherently Colombian, and some of them are also very inherently American or Floridian, to be a little bit more exact. But I actually shout out to Sarasota, who was impacted by some of the hurricanes last night. But I did most of my high school in Florida. I did it in Sarasota, Florida. And then I ended up moving to New York for college, to NYU. And as you mentioned, I did my bachelor's there. And then straight out of college, I went to BlackRock and spent about the last 10 years at BlackRock, mainly focused on growing the ETF business. But it's been a fantastic ride, a fantastic experience. And at this point, I'm more of a New Yorker than anything else, but still hold South America very near and dear to my heart.
I love that. How the heck did you snag a job right out of uni in BlackRock? If I'm a betting man, and I am a betting man, that's got to be one of the toughest and most sought after gigs to get. Were you just a stupidly smart cookie, and were you a big school guy doing all the extracurricular shit? How'd you land a job at BlackRock right out of uni?
Yeah, that's a great question. I think the recruiting process at universities is getting so much more competitive every single year, right? So this was back in the early teens, in the 2000s. So a little bit of a different setup of what it's like today. But look, it's a lot of networking. It's a lot of hard work in school. And it's making sure that you're early and you're applying actively to some of these analyst programs that some of these firms like BlackRock have. And for me, that was a fantastic way of getting into a firm like that one, which, I don't have a lot of family in New York. I don't have a lot of experience outside of myself in the industry. So it's been a journey where I've been able to leverage some of these programs and some of the, quite frankly, kindness of the individuals that I met at BlackRock when I was recruiting and networking to bring me in the door.
That's so cool. Let's jump into 21Shares here. Everyone knows who you guys are. I mean, it's funny because no one knows, I'll be completely honest, even myself, I'm an investor in 21Shares. I mean, I love the ETFs. I didn't even know the parent company was 21Co. I just thought it was 21Shares. So for the sake of ease for the pod, I won't refer to you guys as 21Co. I'll just refer to it as 21Shares. I believe you guys are HQ'd in Switzerland. Is it Zurich? Yeah,
It's in
HQ in
Zurich.
Switzerland. But walk me through the whole process, if you know the story of like how much groundwork you guys did, the lobbying, everything it took to actually get all these incredible ETFs off the ground and literally starting the ETF parade.
Yeah, so I can start from the very beginning of how our firm was actually brought to life. And our founders, Hanny and Ophelia, are long-term friends, right? And they were both living in the States at the time. And it was around 2015, 2016, when they were actually having conversations with their mothers. And their mothers came to them and said, hey, we had done some research on this new thing that we're hearing about called Bitcoin. And we think the use cases, especially in emerging markets, are super clear. How can we add this exposure to our portfolio? And that was back in, the mid-teens. And so there wasn't an easy way to do it. There were no ETFs at the time. And so they had to go back to their moms and say, actually, if you want to add Bitcoin exposure to your holdings, you need to go learn about storage and cold wallets and keys and all this good stuff. So
Yeah,
that was
I'm
the impetus
good.
for them. Yeah, exactly. It's like, any person that isn't super crypto native might be, actually, I'll wait to see if there's an easier way to do it down the road, which is how 21Shares came to be. They actually moved across the world to Zurich, to Europe, with the goal of launching the first spot-backed Ether and Bitcoin products. And they did that in early 2018. And so originally the thesis was, let's move to Zurich where there's clear regulations around what can and can't be wrapped in a product, in an ETF traded product. And so they moved there, they did it, they launched the firm. And now, 21Shares has grown from these two products all the way up to over 50 ETFs globally across 16 different markets. And most recently entering the US business, which has been one of the most exciting launches that we've had at the firm.
It's so cool. And I guess before we keep doing this deep dive here, could you just give a quick sort of, very, I guess high level explanation of what exactly an ETF is?
Absolutely. An ETF is simply a vehicle for which you can add any different type of exposure inside of it, and then you can trade a ticket, if you will, or a receipt that says that you own a part of that vehicle, right? So an analogy that I often like to use is just if you think of a big warehouse, right? And the ETF is a big warehouse, and you can put things inside of it, and maybe for this example, we could pick something simple like gold. If you have some gold bars, you can go inside the warehouse, put the gold inside. Then you get a receipt that says, I own so much gold inside of this warehouse. And then if you wanted to, you could trade that receipt with others that know that the gold is there and they can go pick it up. And an ETF functions very similarly, right? At the end of the day, it's a vehicle in which you get exposure to different assets that are inside. And so what 21Shares is revolutionizing is the concept of putting Bitcoin or Ethereum or any other token inside of that warehouse and allowing individuals to trade the receipts or the tickets, if you will, as a way of adding exposure to their portfolios.
It is truly the best. And it makes, again, you're not biased. I'm definitely biased because I love crypto, but like other ETFs for other industries makes so much sense. And a lot of the time it's just like a bunch of different stocks wrapped into, like you said, this warehouse. And then you get access to all these different stocks from different baskets and niches and industries. But with crypto, I feel like it's almost more paramount and more needed because of how much of a absolute shit show it is. It's nightmare fuel, just like you said. Like if I want to onboard my parents to Bitcoin, it's like, all right, we're Canadian. First, we got to use a centralized exchange, and let's say you want to dabble in shit coins or anything else. Like the easeability in crypto is so not there. It is absolute nightmare fuel. And even if you just want to have your own Bitcoin, like it's really, really not that easy, going to the centralized exchange, blah, blah, blah. But all of our parents, the people with money, like the boomers, they literally just call their advisor, go on their trading platform. You can buy the ETF right then and there. So for crypto, I feel like this just, it almost like, it seems like ETFs were made for crypto. You know what I mean?
I totally agree. And look, I spent 10 years at BlackRock, and during my time there, I became a little bit of an ETF nerd. I absolutely love the vehicle. It's the only way that I invest now outside of crypto. And I really think for most individuals and for most types of assets, it is by far and away the easiest way to add to a portfolio, especially because of the cost, right? If we think about how you can add Bitcoin now through an ETF at, our products are priced at 21 bips. It's so low, it is so cheap, and it's just a very convenient way where you can add Bitcoin exposure or Ethereum exposure to any brokerage account or anywhere that you invest.
Yeah, it's so true. I'd love to talk about the competition for a second, because this is something that really interests me. I guess we could look at it from sort of like the retail and institutional side, but How does I know a bit about this, and I'm sort of teeing you up here, giving you the layup to explain this to the listeners here, but how do you guys connect with the brokers and anyone in a financial capacity who can go to our parents and sort of pitch them on the ETF? Like, walk me through sort of what you guys do to get them to actually get retail or just other institutions to buy the ETF. Because right now there's 12 sort of spot Bitcoin ETFs. I mean, you guys, just launched the Future of Crypto Index, FUTR, which I love. I think that's hot off the press. That literally happened 7 hours ago. And this, represents like 80% of the market. And we'll get into that later. Absolutely incredible. But how do you guys compete with your old firm, BlackRock, or with Valkyrie, or any of the other massive institutions that are launching ETFs? Walk me through that whole sort of roadshow, the sales process, the marketing. How do you guys sort of, move and groove to be like, hey, buy our ETF and not our competitors?
That's a great question, and it's something that I actually love speaking about. So I'll actually start by saying, the U.S. client landscape, I tend to subdivide into three big groups, right? First is the retail investor, as you mentioned, and I think these have undoubtedly been early adopters to our ETF and the ETFs more broadly across the industry, and they've been a significant source of long-term assets for these products. This client base is all about scale, right? So how can you speak to these retail investors in a way that directly meets the needs that they have, and in a way that exemplifies what the value proposition of the product is to them? And so this is really where we focus in our marketing efforts, right? It's when it comes to how we cover, over 350 million Americans, for example. The easiest way to do this is
It's
through
wild.
marketing, and so it's a gigantic group, right? But at the end of the day, it's one of those groups that we actually see the most demand coming from. And I'll actually point to a study that Coinbase did, which says that, over 50 million Americans already own some form of crypto.
Wow.
So that's a great testament to where we are today in terms of retail adoption for our asset class. But I also think we're only getting started, right? If we talk about the 350 million and the currently 50 million existing clients. There's a lot of room to run here, and a lot of room to, quite frankly, educate our clients on what the benefits of Bitcoin and Ethereum and other digital assets are at this stage. So that's what I would say about retail. The next big group are what we call the wealth platforms or the wealth advisors. And this is kind of building off of what you mentioned earlier, which are the financial advisors really that are helping manage end investors' money on their behalf. And so this is similarly a large population within the United States, upwards of 250,000 advisors in the US alone. And this is all about getting face-to-face contact with them, right? And making sure that they understand how these products fit in portfolios for their clients, making sure that they're going through their due diligence processes so that they trust that these products are going to do what they actually say they do. And then finally, it's about making sure that we help them have the sales conversations with their end investors around how do they position Bitcoin? How do they position Ethereum? And that gives us a little bit more scale, right? When we're talking about all the investors in the US. So it's about being very close to them and making sure that their understanding of this asset class is as robust as our own, so that they can eventually add this to their client portfolios down the road. Now, this is one of the slower client groups when it comes to adoption. Historically, typically they do pretty lengthy due diligence processes, as you would expect for individuals that are managing assets on behalf of others. So we've been working very closely with them, and I think it's a part of the market that is going to start picking up very quickly once these products hit the year mark. Right? Sometimes we often forget it's only been since January of this year that these products have been available. Yeah, exactly. So, it's going to be an evolution, but ultimately past that year mark, I expect it to come online pretty quickly. And then the final bucket is really what we classify as institutional investors or asset owners. And these are institutions like hedge funds or pension funds or endowments that manage large sums of money, right? And they typically are a bit more hesitant as well to make some of these allocations. And what we see within this institutional bucket is actually a divergence in terms of how our clients are using them. If I think about a hedge fund, for example, they've actually been early to the crypto game in many cases. And they've been using our ETFs actually for something called the basis trade. And just to simplify what the basis trade is, essentially, if the futures contract price for Bitcoin is higher than the spot price of Bitcoin, there's a little bit of an arbitrage opportunity there. And so hedge funds will come in and out depending on how wide that gap is. And so it's much more of a trading vehicle, if you will. But then on the other extreme, we have asset owners like pension funds and endowments. And these are very cautious investors as well, who are also performing lengthy due diligence processes. and we're only starting to see them dip their toes in the water. We've seen some small sub $10 million trades by a couple of pension funds in the US. And this is really exciting because it shows that they're all thinking about the space, and they're all exploring using these ETFs to add exposure within their portfolios. But ultimately, this is also going to be a let's call it a 3 to 5 year journey to get some of these bigger asset owners in the market as well.
Well said. You brought up my next point, which I absolutely love, and I'll sort of tee this off for, and my apologies for our European listeners and everywhere else around the world. I'm not too familiar with your sort of pension or RIA investment vehicles. Only really familiar with Canada, and obviously in the States, you have your RIAs, but in Canada you have your RSPs, registered retirement saving plan, and your TFSA tax-free saving account. And one thing that I've been telling my friends all of this year, and even before this year, before the ETFs came out, the companies like MicroStrategy, who do own obviously a shit ton of Bitcoin, if you want exposure to Bitcoin in a tax-free investment vehicle, you could do that in the past. Now you can with, of course, the plethora of ETFs, and more specifically the 21Shares ETFs. But this is a great way to get some tax-free savings and build your retirement stack, if you will. And this is something I absolutely love. In Canada, every year you have a certain amount, depending on how much you make, that you can put that in, and it's tax deductible. It's absolutely massive. So why wouldn't you, if you think crypto, and more specifically Bitcoin or ETH, is going to be a powerful asset and something that you should hold, why wouldn't you put that in your RSP, or if you're American, your RIA, I believe it's called. That's something that's absolutely massive. And I really wish more people would be cognizant of that. Is that something that you guys are always pushing as well? Hey guys, this is such an easy, efficient way to grab some tax-free investment into the crypto sphere?
Yeah, so I would start by saying that the taxes are more dependent on the type of way that you invest into the ETF than the ETF themselves. So it all depends on which account you're buying the product inside of.
Right.
So the taxes are actually done at the individual holder level rather than the vehicle, if you will.
Yes.
But look, I hear your point here, which is you could add these ETFs into a long-term retirement portfolio or account that could potentially have some tax benefits. And ultimately, what we're focused on is building the case for investing in Bitcoin and building the case for investing in Ethereum. And individuals can then decide, do I think that this is going to be a good part of my retirement portfolio, right? And think about it that way. I personally am very bullish on the space, and I think a lot of your listeners would agree with that. So if you're planning for 40, 50, 60 years down the line, and you have that long of a time horizon in some cases, I think that's where adding Bitcoin and kind of setting and forgetting, if you will, could be a really valuable strategy.
One of the easiest ways to hodl, because it's all I cannot see a world in which iShares, in which 21Shares somehow fumbles the we got hacked. No, it's just not going to happen. If you have Bitcoin on a little ledger, shit could, knock on wood, hopefully everything's okay, but it could happen. That's one of my other things too. The security of the ETFs. Has there ever been an ETF in the history of ETFs that have gotten hacked? Obviously price can go down for geopolitical events or, nuanced reasons that we cannot foresee. But to my knowledge, I don't think an ETF has ever been hacked or something, right?
Yeah, it's hard for me to comment, I guess, on the entirety history of the ETF industry. But I think one thing that sets these products apart from buying directly, to your point, is that they offer institutional grade custody to clients at very, very low fees, right? So the custody partners that we have on the back end of our product are actually quite different from other ETFs in the industry. And I'll take a second to explain. But if you look at who most of the ETF providers in the market are using today for the custody, it's typically Coinbase, right?
Yeah.
There's one or two small exceptions in the US right now, but Coinbase has the majority of asset share, if you will, within the digital asset ETF ecosystem. And one thing that we at 21Shares have seen in the past that some clients have appreciated is being able to diversify our custodian partners. And so our spot products now have Coinbase as one of the custodians, but we also onboarded Anchorage and BitGo to be co-custodians for these products as well. So if you own our spot Bitcoin product, you're going to have 3 custody partners in the background, all of them with institutional grade custody, all of them operating exclusively out of cold storage. And to your point, providing that level of security that allows our clients to kind of forget about the storage and the wallets and the keys, and makes it just really simple, really convenient for them to own this asset. And so that's something that we're really excited about, and something that quite frankly differentiates 21Shares offering from the rest of the players in the market. And I think it's just directly attributed to the fact that we've been managing these types of products for over 5 years now. And we have some real experience in the digital asset ETF world.
I absolutely love that. Federico, you are on a roll, my friend, but we do need to take a quick break and give a huge shout out to Prime XBT. When we get back, we are going to keep buzzing on everything ETF related and the future of ETFs and all the cool new ETFs that you guys are launching. Until then, huge shout out to Prime XBT, longtime friends and sponsors of the Crypto News podcast. We love Prime XBT as they offer a robust trading system for both beginners and professional traders. It doesn't matter if you're a rookie or a vet, you can easily design and customize your layouts and widgets to best fit your trading style. Prime XBT is also running an exclusive promo for listeners of the Crypto News podcast. Use the promo code CryptoNews50. Again, that is CryptoNews50, all one word, to receive 50% of your deposit credited to your trading account. Again, that is CryptoNews50, all one word, to receive 50% of your deposit credited to your trading account. Now back to the show with Federico. Walk me through the future of ETFs. Like, again, it's always tough to do forward-looking, anything in the future type of stuff, predictions, blah, blah, blah. Obviously, no price predictions on the Crypto News pod. Just as sort of looking at it, like what new ETFs are going to pop off. Is anything going to change? Is the fee structure going to change? If you had a sort of a magic eye and a magic crystal ball to look, maybe a year down the road, 3 years down the road, 5, 10 years down the road, are we going to see a Solana ETF? Are we going to see a shitcoin ETF? Like what kind of ETFs are we going to see down the road? Are the fee structures going to change? Any new packaging, any new wraps? Walk me through anything and everything that you think might happen for ETFs over the next, 6 months, 1 year, 5 years, 10 years.
I love this question because at 21Shares, we do have a little bit of a crystal ball into the future, if you will. And this is pursuant from our European business, which is a great advantage that we have. But we've seen the evolution in Europe already over the last 5 years. And so we've seen how this can go from a regulatory perspective, but also from a client adoption and a product innovation perspective too. The first thing I'd say is I expect a lot more ETFs to be available in the US within a 3-year timeframe. And when I say a lot more products, I mean a lot more trackers of tokens, right? When it comes to, if I think about Solana, when I think about XRP, when I think about DOT, when I think about any of these other more mainstream tokens, we absolutely expect there to be ETFs that are tracking these commodities or these products over the next 3 years. And the reason is we've seen this happen in Europe, right? Our European suite has over 40 products today, tracking all sorts of tokens. And there's multi-asset products. There's products that are holding both gold and Bitcoin. There's products that are, inverse exposure, levered exposure, you name it, right? There's a whole world of product innovation there where through ETFs, you can invest in L0s, L1s, L2s, applications. There's quite a diverse landscape. And so when I think about the next 3 years in the US, there's going to be speed bumps along the road, of course. But ultimately, I expect regulators here to kind of open the doors to that type of innovation as well. And it's primarily for one reason, which is this is great for clients, right? At the end of the day, we're giving clients the most choice and access. And they're able to in Europe right now, they're able to diversify their digital asset exposures to beyond Bitcoin and Ethereum. And what we hear from clients all the time is how valuable that is to them. And they're able to express their personal views through these ETFs. And so ultimately, I do expect the US to get to that similar place. When I think about ETF innovation more broadly, even outside of digital assets, the US has typically been a leader globally when it comes to ETF innovation. And so I do expect the US to kind of catch up, if you will, to Europe from that perspective soon.
So cool. This is a shitty dream of mine, if you will, but what are the odds we get like a shitcoin ETF?
Look, at 21Shares, our firm is fully research-based. So everything that we launch and everything that we offer to clients has a very comprehensive screening process by our research team. This is a team that's based between New York and Zurich. And what they spend their time doing actually is analyzing all these tokens, all of these assets, all of these projects against a pretty significant list of criteria here. And so typically 21Shares will stay away from the meme coin world. That's not to say that another issuer might not come into the market and have some offering at some point. And by the way, there's multiple ways that you can get exposure to meme coins already in TradFi wrappers. None of them are too mainstream at this point. But I do expect that to come at some point, but no time soon.
It's also like the whole supply issue with the shitcoins too, right? Because,
Yeah.
like for you guys have, for every Bitcoin in the ETF, like you guys have that, it's a mirror. It's levered, not levered, excuse me. It's
It's
what's the word I'm
1-to-1.
looking for? It's 1-to-1, exactly. My brain's not working right now. Too early in the morning. But for a lot of the shitcoins, like some of these best shitcoins only have 1 billion supply, right? And like even if we go to WIF, like not a lot of people know this, but one of the biggest reasons why WIF why it absolutely ripped was because after it sort of, went parabolic and went from, cents to like, 15 cents, 20 cents, 50 cents, that sort of absolute massive rip from low cents all the way up to dollars happened because these exchanges needed to buy coins to get on their exchange, right? So if you want supply as an exchange, you had to friggin' buy the coins off spot, like off the market. It's not like you go to, the CEO of WIF and be like, yo, I need some coins to put it on the exchange. That wasn't a thing. The dev, sold out super early, still made a bag, but that's another issue with the shit coins where it's like the whole supply thing too. So very, very interesting stuff there. I want to talk a little bit about sort of just the whole political sphere. Obviously you guys are super tied in. I don't want to get too political and everything, but one thing that does worry me, Federico, is if Kamala wins, and again, I'm not even American, so I can't even vote, but as Canadians, we're technically Americans. Like it's sort of true, like whatever happens with you guys just sort of trickles over to us. But if she and her crew does get in and sort of remains at the helm of the US, are we hooped? Are we screwed? Like, are we going to see a bloodbath here? Are they going to actually regulate some crypto? Or are they going to go against us and almost like hammer? What do you think is going to happen there?
Yeah, I love this question because I actually think in the US, we're kind of turning a corner, if you will, from like the politicization of digital assets and crypto as a whole in the US. Very, very fundamentally, right? If I think about which states right now, the majority of crypto related innovation is coming out of, it's typically California or New York, right? And these are both very blue states. But if I think about which states have the most miner populations and the most mining activity, it's typically red states, right? If I think about the South in the US. And so ultimately over the medium and long term, I expect to see great support for digital assets from both blue and red leaning politicians, right? And I would actually point to positive signs we've seen from the current administration already, and they don't have too much to do exactly with product innovation, but I will point to the great news that we saw last week, which was Bank of New York was officially allowed to custody digital assets and get it around this regulation called SAB 121. And this is fantastic, right? Because when it comes to ETF investors and when it comes to the financial market ecosystem as a whole, having some of these big TradFi banks coming into custody digital assets is a great tailwind, right? And the current administration is the one that allowed that to happen. And so ultimately, I think whoever is in power over the next 4 years will be supportive for our space. I think also the narrative that we started to see coming out of Washington is that we do want to be a leader in digital assets and kind of fully embrace the technological revolution that comes along with it. And so from our perspective at 21Shares, we are far less concerned around what the outcome in November is. We're actually just happy that it's becoming a nation's wide or a fundamental topic that's being discussed across this election cycle, because it's going to encourage more people to become educated about the space. And ultimately, the more eyes and the more ears we have involved in digital assets, the better.
Well said. I do wish that the Americans would be maybe just lend an ear to the Canadians who, like we have Waterloo, which is, one of the best schools in the world. Some of the most, the amount of capital and GDP that has been created from Canadians that has been lost to you guys, like 99% of our top talent, whether it's tech, finance, med, you name it, like all the best doctors, we all get poached. We go down to the States. The best finance people, the best builders, we all get poached. We go down to the States. I really hope this doesn't happen to you guys. It would really, really break my heart, for lack of better words, if if Kamala and crew or Trump or whoever, obviously Trump won't do it, but if Kamala and crew gets in and says, hey, we're not pro crypto, blah, 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 everyone moves to Dubai, everyone moves to Singapore, everyone moves to Zurich, blah, 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 that would really piss me off. And again, it's never really happened to you guys. I'm sure it has. I just don't know about it. But I see it every single day. I have friends who, are just absolutely brilliant people and created incredible companies. And they're like, we're moving. We're going down to the States. We're going to Texas. We're going to Florida. We're going to New York. Canada ain't it. So I really, really hope that doesn't happen to you guys.
I'll offer a thought there. I think one thing that we've noticed throughout our first year in the U.S. market, right? We entered actually in November of last year, so we're less than a year into our time. But one thing we've learned, and this is also stemming back from my experience at BlackRock, is crypto's here to stay, right? Crypto's not going anywhere. There's a whole world of client demand out there in the U.S. in particular, which I'll focus on here, that is going to keep a lot of attention from a regulatory perspective on this, but also from like a client adoption of these products as well. And so that's where, when I hear the Coinbase stat of 50 million Americans already owning crypto, when I see, 20 billion in flows coming into digital asset ETFs this year alone in the US, which is, it blows every single record away from an ETF launch story perspective. There's no way to interpret this other than crypto is here to stay, and it's going to play a role in U.S. Client portfolios, right? And so whoever comes into power in November, I think it will ultimately have to embrace that. And it's something that there's clearly demand for, and politicians will ultimately support their constituents, right?
Yeah, well said, mate. Look, a little tight for time here. A couple more and we will wrap up. Walk me through some of the new incredible products that you guys have. Like, also side note, what do you guys call them? Like, do you call ETFs products? Like, what is the actual sort of quantifiable word? Is it what is that? But before we get into, ARKB and C ETH, like what are they called? What do you guys call them?
We call them products. There are products. They're, ARKB and C ETH are actually our babies. But no, I would say we treat them as products. We have, so just to take a step back, in the US, we have 7 products available today, or 7 ETFs. The first ones we launched in November of last year are futures-based exposures. So they're ETFs that buy futures contracts on Bitcoin, they buy futures contracts on Ethereum. And then we have a set of other ones that kind of combine the different strategies together. So you can buy, one ticker that has Bitcoin and Ethereum futures inside of it. You can buy another one that's pretty interesting strategy, which combines cash and Bitcoin. And so we're able to kind of shift the weighting of the portfolio between one side and the other, depending on on-chain metrics that our team is analyzing every day. And then this year in November, we launched the 2 spot products, the Bitcoin spot product in January and the Ethereum spot product in July. And we've been so far focused on bringing new strategies to the US market, but working very closely with regulators to do so.
So cool. And I know this isn't I could be wrong here, but the new one that just popped off, which is FUTR, is that available for US folks or is that strictly Europe?
That is strictly Europe at this point.
Gotcha. Okay. Any new ones coming out over the next couple of weeks, months that we can look forward to?
Yes. Look, unfortunately, I can't comment too much on names and give specifics on products that are in the pipeline, if you will. But look, we've been seeing a lot of activity across the industry, not just from 21Shares, but from other issuers too, in terms of filings for new ETFs. And so the way that we typically view this is the more people are trying to come to market with good offerings, the better. And we will certainly be participating in some of that product innovations in the near future.
I love it. Mate, what an episode. This was so much fun. Really appreciate you coming on. And definitely got to have you on for round 2, especially with how much you guys are moving and grooving. Before we let you go, can you please let our listeners know where they can find, of course, you personally and 21Shares/21Co online and on socials?
Of course. So we have our fantastic website with a ton of research and educational materials, 21shares.com. And then you can find me on Twitter at Fede, Fede _Brokate, which is my last name. And you can find us, our firm, on Twitter at 21Shares US as well.
Amazing. Federico, really appreciate it, my man. This was just an absolute treat of a time. Wishing you and the team all the best and can't wait to have you on for the next one.
Thank you, Matt. Appreciate it. Looking forward to being back.
Folks, what an episode with Federico Brokate, VP and head of US business at 21Co, the parent company of 21Shares. We jumped into everything, current state of ETFs, the future of ETFs, what exactly is an ETF, the convergence of crypto and TradFi, how these guys sort of pitch ETFs to financial advisors, and some implications on the upcoming US election, where Federico thinks that we are good either way. It doesn't matter if it's Team Blue or Team Red, and some cool arbitrage opportunities in ETFs. What an episode. Huge shout out to Federico and the team for making this happen. If you guys enjoyed this one, and I hope you did, please do subscribe. It would mean the world to my team and I. Speaking to the team, love you guys. Thank you so much for everything, especially Eustace. You are the man. And back to the listeners, love you guys. Keep on growing those bags and keep on staying healthy, wealthy, and happy. Go touch some grass. Keep on printing money, and we'll see you guys on the next one. Love you. Ciao.